Well, welcome everybody. Nice to meet you and welcome to this webinar. People are still coming in to listen, so I'll try to let you in as soon as possible. But for the people that are already joining us, welcome. My name is Lonneke, and today I will be discussing the VAT in the digital age. As you probably know already, the European Commission has presented a completely new plan to modernize the VAT rules in the EU. So we have a lot to discuss. This webinar will be an introduction. There will be 4 more webinars coming in the next months. So if you have any questions during the webinar, please put them in the chat, and I'll be checking the chat. Or put up your hand, and afterwards we'll see, and we'll ask you if you want to ask the question at that moment. Thank you for your attention, and I will present you to Paul Cramer and Bas Koning, and they will be hosting this webinar. So have a good time. Thank you.
Yes, hello and welcome to our webinar, the first one in the VAT on the digital age. We have been very excited and looking forward to all these new rules. It has taken a while for the European Commission to actually come up with the new rules, but we are now very happy that we have them. And it's quite a lot to digest, so that's why Paul and I myself have tried to actually make something out of that. And that is something that we want to present to you today, but also in the coming months, as Lonneke already mentioned, with the whole series on VAT in the digital age. My name is Bas Koning. Next to me is Paul Cramer, and we are both working for Les Gray. So again, welcome. The VAT in the digital age is it's a long journey, because it has already started years and years ago. The VAT system already exists in Europe since 1954 in France, but after that a lot of changes have happened. And what we will try to do is we will try today to take you on this journey from the start of VAT to where we are today with the VIDA rules, with the proposals of the European Commission. And then in the coming months, we will actually elaborate further on the specific topics that are being covered in the proposals of the EU Commission. So that includes, for example, the electronic invoicing and the real-time reporting requirements, the platform economy, the single VAT registration, and any other stuff that we come across or that comes up. And feel free to ask your questions, not just today during the webinar, but also afterwards by email or via LinkedIn, etc. You can always find us. And we are happy to hear from you what you are thinking. For us, it's also a journey.
Absolutely, Bas, it is, and maybe it's good to share with you that the proposals are made public on the 8th of December last year, and there's a consultation round going on, which initially would be already closed, but it's not. It's still open, and the last communicated date of bringing in your reaction or ideas on these proposals are, I think, the beginning of April, it was.
Yes.
And what we are aiming with these series of webinars and sharing our information and our views and your views with us is to see what the ideas on the ground are relating to this set of proposals. We decided to already work on the proposals as such and not wait for, let's say, the final decisions that were agreed upon and the final changes in the law themselves, because we are of the opinion that these changes are such fundamental, but also such important for companies and businesses to be prepared on these upcoming changes, that it already makes sense to discuss this already with you based on the proposals. So please take into consideration that these are just proposals, but I can tell you for 2/3 of it, it is already probably existing, or it will be proposals that will be converged in legislative changes coming up.
Yeah.
Okay, Bas, take it away.
Yeah, and I think that's what we want to do today. So we'll first start with a short history lesson. And I won't go back to all the old Stone Age time where VAT was still levied in salt. But nowadays it's a little bit more modern, but the next step is that we are going digital. And I know that the EU Commission has actually presented these new rules as some sort of a butterfly that it's coming out of its pop, and it's developing and it's evolving. I think it's been taking a little bit longer even than just the life cycle of a butterfly. And what we wanted to do is just go back a small step, I mean, at least in that whole history scheme, back to 1993. 1993 is a very important year for EU VAT because that was the year when import and export transactions disappeared and were replaced by intra-community transactions. And that was really a huge step in VAT. Companies had to report transactions as no longer as import and export. There was no customs process anymore, but instead there were actually other requirements. You had to make sure that you knew the customer, that you had a VAT number of your customer, etc. Everything had to be reported via a European system, which was called VIS. In Dutch, that word means dirty, but actually it stands for VAT Information Exchange System. And that was in 1993 when the EU members were not that many, but they were using the system to actually make sure that they could follow what was going on cross-border in the EU. And that idea still exists, and that comes back now in the new VAT in the digital age legislation. But before we get there, let's first go to the next steps. The European Commission, European Union have been looking at the European rules since 1993, and they actually implemented the system back then as a temporary system. We are now 30 years further, and it's still a temporary system formally. So the definitive VAT system has been looked at, has been proposed, has been discussed already many times, but the VAT in the digital age is not the definitive VAT system. There have been many trials and errors. If you look at the European rules, 2006 was a big recast of the VAT directive. Many people saw that as a big step forward, but it was more or less a renumbering of the VAT rules from the 6th directive to the EU directive. Interesting, very good, but also not really rocket science. The VAT package was really already a bigger step forward because there the European Commission introduced new place of supply rules, which is actually now continuously looked at because that is also part of the definitive VAT system. Where do you tax transactions? So that's still something that is brewing.
That's the concept of the difference between B2B and B2C services. That was the first time that we talked about B2B and B2C.
Yeah,
as a piece of the system, the VAT was levied upon. Yeah.
Yeah. Another big step was 2015, where the mini one-stop shop was introduced. I mean, you can argue that there were a lot of other steps in between, and I will mention them briefly as well. But the mini one-stop shop is an important one. Why? Because the VIDA actually goes back to, hey, that was a good idea. Let's build on that further and further. And they already did that in 2021 when they implemented the new e-commerce rules for VAT. With the OSS, the one-stop shop, and the IOSS, the import one-stop shop scheme, they were using the mini one-stop shop. And they're actually going one step further now in the VIDA proposals. As I mentioned before, there's a lot of other stuff that has happened. I mean, one of the major drivers for VIDA, but also for all the previous reforms or the previous changes in the VAT world, has to do with the VAT gap. The first report on the VAT gap was published in 2009, sorry. And that report has been updated every year. The most recent one covers 2020 numbers, I believe, and it's actually the gap right now is 93 billion euros. And we will come back at the VAT gap in a moment. But this is more or less the background of VIDA. You see that there has been a lot of things going on, and the European Commission really has taken some approaches in the past that you now actually see coming back in the VIDA proposals.
Yeah, moving to digitalization and robotization and all those kind of things that is challenging in these days around data and the availability of data and the cross-checking of data.
Yeah, exactly. And that's actually exactly what the European Commission also says itself. They say we have taken a lot of measures already, and now VIDA actually brings everything into place and says we are going to modernize the EU VAT system. We're going to make it to work better for businesses, and we're going to make it more resilient to fraud. And they are focusing very heavily on digitization, on making tax digital. Well, that's another phrase that's not used here, but they want to look at how can we track and trace transactions digitally. That's more or less the background of what they want to achieve. I just mentioned the VAT gap, and one of the main goals, and that is not new, but one of the main goals of VIDA is to reduce the VAT gap, the VAT fraud that is going on at the moment. And the gap at this moment was 93 billion euros, which is a lot of money. What is the VAT gap? Just a reminder, that's the difference between the expected VAT income and the actual VAT income by EU member states. And in some member states, the gap is really huge. In others, it's a bit less, but there is still a VAT gap in all the EU countries, which can be caused, by the way, by several causes. It can become because companies go bankrupt or because of timing differences. Sometimes it's also due to the tax authorities that are reporting it in the wrong way or that are levying the wrong amounts, etc. But a really big part of the VAT gap is fraud. And that's what the tax authorities, that's what the European Commission wants to battle. And they believe that by tracing and tracking transactions almost on a real-time basis, that is the best way to combat fraud.
Which was already proven by some member states, because we do have 6 or 7 member states currently in the EU with some kind of a reporting requirements on a, let's say, live or almost live or periodical basis, where transaction data is exchanged with tax authorities. And I think the issue there was also that the European Commission had to deal with those local initiatives, because if you have 26 or 27 initiatives that are all different, that are all using different systems, and it's already a big hassle to deal with 6 or 7 countries as such, that would not be a doable way. So businesses expected from the European Commission that they would come up with some kind of a European-based reporting system to overcome individual and local hurdles on that one. So they do. They take a reasonable period of time. The proposals linked to that one is an implementation date of 2028, and it's only aiming for the intra, so the cross-border trade as such. It is available to use it for local trade as well, but then it should follow the standards of the European Commission. So that's the way forward in Brussels, how they feel they can tackle and they can prevent businesses to be hit by local requirements instead of an EU broadened requirement.
Yeah, no, and I think that's indeed that we discussed that before as well. If you look at what happened in the past couple of years, the EU Commission focused on fraud, which is really a big issue, and I think everybody agrees that we want to minimize fraud. But there was the problem for the EU Commission was that they did not have enough handles and that not have enough power to actually do something really about that, especially not on the national level. So what happened is countries started to implement their own rules. Think about SAFT, Standard Audit File for Tax Rules. Think of e-invoicing requirements or SI reporting in Spain, real-time reporting Hungary. Now, of course, we have Italy, we have France thinking about it, etc.
Electronic invoices through the tax authorities.
For example, yeah, the pre-clearance idea that Italy is now doing. So I think that the European Commission also took the VIDA as an idea to say, well, we have to do something now before there's really a wild growth of all these different types of national rules, which makes it very difficult for businesses to do business abroad, especially. I mean, if you are based in one country and you have to deal with your own tax authorities, you're probably used to the rules that you have in that country, you know the language, you know the people, you know the systems, etc. But if you then have activities in another EU country and you have to meet all the specific requirements of that other country, that's really a burden. And that is something that the EU Commission recognized, but also something where they said, well, we cannot really do something about that because it's actually up to the national tax authority to do this. Where they could do something, and that is actually the second point of this slide, they say, well, we can help you actually making it easier if you do cross-border transactions. Because, as I mentioned before, we have the old V system, and the European Commission is still in charge of keeping track of all the EU transactions. So they say, well, we can actually make a new standard for cross-border transactions and for reporting those cross-border transactions. The way they now are doing that or trying to do that is they say, well, we have now developed a new system, a new idea, a new standard, and we are going to make that mandatory for cross-border transactions. And well, hopefully member states will actually now see that that is really a good system and they will start using that also for their national reporting requirements. Yeah, that's the idea.
Yeah, if it goes for the member states that are not currently already having such a reporting requirement.
Yeah.
So there is a big difference between member states that do and member states that don't. I always think about Spain, which invested a lot of effort in setting up the SII reporting as such. If I understood correctly from my Spanish VAT colleagues, they are all more or less set. Businesses are set. It's an up and running system, and everybody is well, not really happy, but they are fine with it. But it took a lot of time, and a lot of effort, and a lot of cost to get it compliant, as the Spanish tax authorities wanted it to be. But at the same time, they really reduced their VAT gap. So yeah, it works. Absolutely, it works. Okay, let's move on to the.
Yeah. Well, I think just mentioning the last point, the other big thing that VIDA is mentioning is that the European Commission likes the idea of making a platform responsible for collecting VAT on behalf of consumers and taxpayers. They have already started doing that with the implementation of the e-commerce rules, where platforms were made the so-called deemed supplier for certain transactions. And they really like the idea because according to their own figures, they say, well, 8 platforms are now collecting more than 10 billion euros a year of additional VAT, which we otherwise wouldn't have collected. So they really like that idea of platforms, making platforms responsible for VAT.
That was a 6 month figure or the 1 year figure.
Well, they have mentioned it a couple of times for already after 6 months, yeah. But then they still use that after a year. Okay. Interestingly.
Okay. Huge numbers.
Yeah, exactly.
And well, let's say that I have the idea that the success of the platform rules coming into place in July 2021 was already mentioned on the 2nd of August 2021. Yeah. Almost. So it is also a part of the strategy as such to bring in these changes.
Okay, exactly. So what will happen? The VIDA rules say, okay, we want to achieve this, but how do they want to achieve that? And we already touched that briefly. The European Commission really strongly believes in digitalization. They think that if everything is digital, digital is fast, digital is automated, it can be, so it's easily accessible, fast available, and less errors. That's what they hope for, and that's what they think automation means, or digitalization means. So the European Commission strongly puts forward e-invoicing. Right now, it's possible to issue an invoice on paper as a PDF file even, but even a small note or a contract can be regarded an invoice. In the future, and the future is very close by if you look at the timeline, e-invoicing will be the standard. So that means that, especially starting with cross-border transactions, but after that, more or less all the B2B transactions will have to be documented with an e-invoice, an electronic invoice. And an electronic invoice, and we will come back to that later in other sessions of the other webinars that we will do. What is an e-invoice? But just very briefly, a PDF file is not an e-invoice. It will be really a structured format based on the PEPL 3.0 requirements or standard, so to say, which is going to be very interesting because right now some countries know e-invoicing, but by having one standard for the EU, it means that everybody will have to look at their own systems, at their own software providers to say, okay, can we actually issue an e-invoice, but also can we actually receive e-invoices and process them?
That can be processed.
Yeah, so that's going to be interesting. And the timing is very short already. Yeah.
Can I add a little bit on the real-time digital reporting and the linking between e-invoicing and that, because this part of the proposal is the last one. So this is the milestone for 2028. So talking about e-invoicing and digital reporting in 2023 is fine, but take into consideration that it is 2028 to be live. But the horizon on that picture is that there is a digital highway where all data related to transactions is produced and visible in a structured e-invoice, but at the same time, it's already the data that needs to be reported on the real-time digital reporting. So more or less, we call it already a digital highway. There is no any interference necessary there. Wherefore would we need bookkeeping or something like that? Well, yeah, we still need it, but from a VAT point of view, if somebody places an order in your, for instance, your web shop to get some services or to get some goods delivered, all that data is already the data that the tax authorities want to know on the digital reporting. So the idea is think and approach it like a digital highway. And of course, it begins with an e-invoice because then we all are forced to think about systems and the processing of data and all those kind of parts of a digital highway. That's good, but it's 2028. And the standard, the structured e-invoicing as a standard, and the fact that it will be there and no longer under the conditions that a recipient of an e-invoice has approved to do so. That approval, which is now a piece of the existing legislation, that will be abolished as of January next year. That's the idea. So that's the most nearby change in the VAT directive. E-invoicing will be standard. It is no longer depending on the approval of your customer base.
Yeah. Or of the tax authorities. Yeah. So that means next year, January, if a supplier sends you an e-invoice, you have to be able to deal with that.
Yeah, you must be able to process it.
Yeah, exactly.
And again, it's not a PDF.
Yeah.
Okay, we'll have an extra webinar on that one based on experiences on B2G transactions and those kind of things. Let's move to the platform. Shall I do that one?
Yeah.
Platform as deemed supplier. That's something which was brought in as a new feature in the July 2021 changes. It will be extended now to, let's say, passenger transport and short-term accommodation. Let's call it by name. It's Airbnb and it is Uber that was causing a lot of issues with the VAT system as such, because those services that are run over Airbnb and Uber are what we called initially C2C services, so customer to customer services. Because, between 9 and 5, I'm a tax advisor, but at 7 this evening, I will riding my private car as a Uber. That doesn't link into the existing VAT system very comfortably. So we had to deal and we had to do something about these new areas of services provided by not recognized, not registered, basically taxable persons for VAT. So the idea is we extend the idea of platforms being the deemed suppliers. We extend it to these specific types of services, and the platforms are deemed to be the supplier of those services to the customers. And the initial supplier, the Airbnb owner of a home, or the taxi driver with his private car, they are of course taxable persons, but their supply to the platform is deemed to be a VAT exempt service, and they don't have any right to deduct input VAT. So basically, it's in the framework, the legal framework of the VAT directive. It's brought into the framework, but still they are C2C services, and the platform is the collector and the reporter and the payer of the VAT of those kind of services. And absolutely, this will be broadened in future more and more and more and more. It's very easy to, in the digital age, to make use of the platform roles to the max. So this is the second step, and don't be surprised for any further steps moving on that one. Are we just only collecting VAT for platforms in 10, 15 years time? I don't know. It's a discussion we have with our existing customer base on the IOSS. Those are customers that are running their own direct sales. They are not running their sales through a platform. They have their own direct sales. So as long as there is a existing market without platforms, I think it should not be only a collection through platforms there. Good. In a webinar on platform, we will discuss these ideas and the legal framework which was set by the European Commission in more details. That's for 2025, by the way. So that's pretty nearby.
Yeah.
Pretty nearby. Another one for 2025 is the single VAT registration across the EU.
It's, well, yeah, I mean, it's really not really, it's mentioned as one of the big things that VIDA will bring us. The one-stop shop, the single VAT registration, and then reporting all your transactions all over Europe in a one-stop shop VAT declaration. It's not just only for 2025, because it's linked in different steps in the whole VIDA proposals. So it's linked to the new rules on the transfers of own goods, for example. But it's also linked to the new reverse charge mechanism rules, etc. And the idea is that when you have taxable activities in the EU, you only need one single VAT registration in the EU to report all your sales transactions. That's the idea, which sounds nice. I mean,
it sounds perfect.
Yeah,
it sounds perfect.
Right now, if you have transactions in 3 or 4 or 27 EU countries, that means that you have to register for VAT in all those countries, which means that you have to, of course, pay a registration fee. You have to maybe appoint a fiscal representative. You have to submit VAT returns in that country. You have to keep separate bookkeeping per country, which is a lot of hassle and actually is costing a lot of money to companies. So the idea of bringing that down to one single VAT registration is a great idea. There's a lot of questions still linked to that, because one of the things is it really going to be an option for companies, or is it going to be obligatory, or is it just something? Can you still have multiple VAT registrations, for example? And if so, what are you going to report then locally? Can it sometimes be beneficial even to have it?
Yeah, there is a big question mark on that one because the idea is perfect. I'm absolutely in favor of it. It goes for EU established businesses and non-EU established businesses that get the option to choose a member state of identification, exactly in sync with the existing identification rules for non-EU established businesses. But there is a kind of a choice. People do have a choice because you are still able to register in any member states of the European Union where you have taxable events performed for your account. But that brings in the cost that Bas already mentioned, and well, basically Bas, 2,000 to 3,000 euros upon registration, with 8 to 12,000 euros upon a yearly compliance cost per country. That's the figure on the left side of it. If you go for a single VAT registration and you opt for the one-stop shop to be applied, because that's the rationale behind it, you need to apply for the one-stop shop, then you are hit with the burden that you cannot deduct or recover your input VAT directly. There is a distinction between the VAT payable and the VAT recoverable for a business. And the VAT payable is dealt with under the one-stop shop model. You can report it in the country where you are established, or for non-EU businesses where you are identified. So indeed, you have one, let's say, European VAT return in that member state for all the member states. Perfect. But you cannot deduct your input VAT in all the other member states. You need to file a refund to reclaim. And we all know that the refund procedure, which is currently also digitalized, but it's still a big burden because the member states where you need to get your money from are not really, let's say, cooperative in understanding that you are entitled to get your refund. What we will bring in, and I think a lot of businesses and other parties will do to the European Commission, is if they really want to support businesses and bring in solutions that will reduce administrative burdens and administrative cost, then they should more or less safeguard to the businesses that recovery process, if it's excluded from the one-stop shop model, and it is, and it will remain to be, then the recovery process itself should be more smoothly, and at least accounts payable invoices should be paid out by the tax authorities much faster and much easier than that is currently the case with recovery claims. So it sounds perfect, it's a good idea, but the execution needs some improvements. So definitely, Bas, in the webinar where we go into more detail on this one. And then again, what you said, it is not for one type of transaction, but there are 7 or 8 different flows of goods or transaction flows that are included in this proposal or this part of the proposal. We need to discuss them with you. Some of them will have been more interest in, let's say, the transfer of own goods between member states, and others will have more interest in, let's say, the solution that it will bring in for margin goods, for instance.
Yeah.
Okay. We're 30 minutes on.
Yeah. So
can we have a check on?
Yeah, Lonneke, do we have any questions so far in the chat box?
Hey, Bas. Thanks.
No questions. Well, if you have any questions,
no, at the moment I don't think there are any questions at the moment. I don't see any hands, so I think it's probably best we'll continue. But just letting you know that people are able to see the slides, but they're not able to see you guys. So I don't know if people can see me as well. But
okay. Well, you don't miss too much about it. And at the end of the presentation, we will just make sure that we won't share the screen with the presentation. Then you really can see us.
Okay. Okay. Well, I see somebody answered already, and they said that they can see you, so that's good.
Oh, okay. Well, hello.
Okay.
Okay, well that's good to know. And by the way, we do the whole presentation and the whole series in English. And I know that we are, of course, Les Gray is based in the Netherlands, and I know we have also people watching from the Netherlands. And if you have any questions in any other language than English, also feel free to ask your question in your own language or contact us afterwards, and we can explain to you also in Dutch or in other languages if you want.
Okay, we do one on the Polish ones then. Okay.
Polish is a bit difficult.
Good.
No, I think that. Oh, sorry. I think that if you look at the whole VIDA is nice. It's interesting, and what the EU Commission wants to achieve makes sense in a way. But they also have highlighted the advantages that they see, which may not always actually be the same advantages as we or you see, because they are looking at it from their own perspective, obviously, but also from the perspective of the member states, and also from the perspective of the EU public, so to say. If you go to the website of the EU Commission and you look for VAT in the digital age, you find a very nice movie where they actually say, oh, VAT fraud is terrible, and we can now save a lot of money and spend it on education, on healthcare, on better roads and everything. So that's also one approach of the EU Commission, where they say, yeah, these rules are way broader than just VAT. And obviously they have to say that, because otherwise politically they will never be able to get this through. And it's already quite difficult to get this through, according to the Commission themselves. But the advantages that they see is that for member states, there is a really big advantage because they can detect fraud way faster. If transactions are reported in real time, yeah, it's of course very easy and very simple to match it also in real time and to find any errors or any missing information or any things that's not there.
Yeah.
So yes, of course, that's a really big advantage for the tax authorities.
It must be there, but
yeah.
But the downside is that the taxable point will change. So you will get an obligation that you need to raise an invoice within 2 working days after the taxable event.
Yeah.
Which is now before the 16th day of the next month. So at least under the current legislation, you have 15 days at least, or maybe 45 days at max.
Yeah.
And under this new set, it's 2 days. And 2 days after the invoice has been raised, you need to report. So it's not 100% live, but in 4 days' time, your transaction information is available in the systems of the European Commission and the member states.
Yeah. And it's not just the sales, which you now have to report as an easy sales list, for example, but it's also going to be the purchases. So also if you purchased any goods from another EU country, for example, you need to report it within 2 days after you receive the e-invoice. And that is also done, of course, so that there can be a match made within these 2 days by the tax authorities via the fee system, which will be replaced, by the way, with the whole DRR, the digital reporting requirement. That's what DRR stands for.
You could even argue that it is not anymore necessary to submit a VAT return itself, because all the transaction data is already there.
Well, yeah, I do agree a little bit, especially for easy sales list, which will actually be abolished. But VAT returns, on the VAT return, you still report also domestic transactions. And the idea right now on VIDA is that it's focusing firstly on cross-border transactions, on intra-community transactions mostly. So for your domestic transactions, you still need to submit a VAT return on which you report also your domestic sales and purchases.
Yep.
And of course, as we mentioned in the introduction, the European Commission has the idea that with the European standard, they also want to make sure that member states will actually use that same standard also for domestic transactions in the future. So don't be surprised that, yes, we have to do e-invoicing and real-time reporting as of 2028, but maybe also for domestic transactions, because some member states will probably take up the glove and say, yes, let's do this.
Yeah, that's one of the elements I have questions with. I still not believe very much in the, let's say, cooperation between the Commission and member states for all elements.
Yeah.
And probably this national reporting is something which will be at the local member states themselves for as long as possible, as long as doable.
Yeah.
I don't think they will give it up that easily, but okay.
No, and especially in countries that have just implemented something like Italy, indeed. So, yeah.
Let's go to the bumpy road, Bas.
Yeah, exactly, because we mentioned already that, yes, the reduction of compliance cost, of course, it will be a reduction if you don't have to register everywhere anymore. But will it really also be a reduction if you now have to make sure that all your systems are up to date, that you are actually able to issue and receive e-invoices, that you are going to report everything on an almost daily basis. So there will also be an increase in reporting requirements in a way. So, but that's a different part of the story that I think it's interesting to look at.
Yeah, it's hidden
Yeah.
in the bookkeeping cost of the company.
Yeah.
So it will not be as visible as it is right now as a separate service, but it will be part of your administration cost.
Yeah, exactly. But no, indeed, you mentioned the bumpy road already.
Yeah, there it is again. Yeah.
We of course, when we started looking at the e-commerce rules in 2021 and before, we said it's going to be a bumpy road, and that was for the implementation of the e-commerce rules. That was also because back then the time frame was short. There was a lot of unclarity. Tax authorities were not ready, etc. Now with the VIDA, what we know is that the time line is a little bit longer. 2028, then everything has to be in place. So that means that companies, advisors, and most importantly also tax authorities will have longer time to prepare. Will it be enough? And will there be any changes? Well, that's going to be a big question.
Well, if we take the Netherlands, for example, I don't want to be very rude on our own tax authorities, but the Dutch tax authorities are well known for their not so modern ICT systems, IT. I think they just raised in public a notification that they will have a little bit of relief in the historical IT system as of 2026.
Okay.
So they believe that they can pick up new IT environment within the existing IT environment as of 2026. Well, if you lay that well, it is not even enough. And so still the European Commission said that for the digital reporting requirements of 2028, they will develop the European part of the system, but the local tax authority still needs to develop their local entry to that piece of software.
Yeah.
So in the Netherlands, we should still be worried on the IT part of this VAT in the digital age proposals.
Yeah, and probably other countries as well. And I mean, some countries will indeed like the idea of having a European standard and implement that, and they are happy to do so, and they have the capacity and the knowledge to do so. Other countries will be more reluctant because they already have their existing system, and so they will. That means, will they have to then go back or have to reduce it? Or
why would Spain change anything?
Yeah,
they already have it.
Exactly. So that's going to be interesting. So that's why. Bumpy road, yes, we think there will be a lot of challenges from businesses, from tax authorities, from member states, from advisors. Yeah, exactly. So IT-wise, it will also be challenging. And the timeline is one of the biggest challenges, I believe. As Paul already mentioned, if you look specifically at the Netherlands and at the past, how we dealt with the e-commerce rules, for example, the Netherlands was not ready. Germany was also said they were not ready, etc. And still, until today, we notice that countries have issues with dealing with digital reporting by companies. One way or another. I mean, even if it's just a VAT refund request, but also the IOSS declaration submission. So IT will be challenging for most of the EU countries, I believe.
That's your timeline. Yeah,
exactly. But the timeline itself is challenging. I mean, 2028 is the date when everything has to be done. But next year already, the first changes will occur. Those changes may seem relatively okay and not so big. But yes, as we mentioned before, if a supplier next year issues an e-invoice to you, you will have to be able to process that. And you cannot say, no, I don't want that. I want to have a paper invoice. No, he's allowed to issue an e-invoice. 2025, there will be quite some more changes, mostly on the call-off stock, but also on the reverse chart mechanism, but also, and that is very interesting for people who are dealing currently with the IOSS system. The IOSS system now says that you have to give your IOSS number to the customs authorities when you import products, but it's quite fraud sensitive because anybody can give a valid IOSS number to the customs authorities and import products VAT free. In the future, what will happen, and that should be in place the 1st of January 2025, there will be some sort of a verification system so that IOSS numbers will no longer be abused. That's the idea.
Yeah, by linking to the unique consignment. No?
Yeah.
And maybe that's good to share with the public already that are working on the IOSS with us. As you already know, as you all know, we were one of the parties that were very keen on abolishing the €150 threshold, because that's not really a solution to the whole of the business that is run through IOSS. And now it became clear under the proposals and the texts that were shared by the European Commission that that threshold will only be abolished when the new customs code will be implemented. And any idea, Bas, that proposal is on the table for 2024 or 2025?
Yeah, I think,
and it's not implemented yet then. So we are hit with the threshold as such, at least for the coming 3 years. Which is personally for me,
bit disappointing. Let's put it like
that. Absolutely.
Yeah. So the timeline is going to be challenging, but we think there's more challenges. And there's a Dutch saying that if something gets friction, then it gets shiny. But anyway, we think that there's a lot of friction going to happen in the future. Because yes, of course, nobody can say that they don't like the reduction of VAT fraud. But yeah, what you do is you also say that you reduce the administrative burdens for companies, but are you really doing that? So there's going to be a lot of challenges in that respect as well, and probably a lot of feedback from companies and from business organizations on this to say, well, come on, guys. Yes, you say you're going to reduce my administrative burdens, but actually I need to do more.
Yeah, it differs. It differs from the type of transactions you are dealing with. So if we discuss the let's say the single VAT registration and the extension of one-stop shop scheme more in detail, then you will see that some advantages are really there, but others are not benefiting from that as it should be.
Yeah, exactly. I think another friction is, and we mentioned it a couple of times already, is that if you now have a country that has existing e-invoicing or reporting requirements, and they now need to adjust their own system to meet the EU standard, they will be reluctant to do so. Spain, as Paul mentioned, they're happy with their own system. Italy just have implemented a whole new scheme, and they say, well, this is going to work and help us reducing VAT fraud. So we are expecting also quite a lot of feedback from member states on that part, which may result in companies having to deal with two different systems: the EU standard system for cross-border transactions and the national system if you are registered or established in another EU country where they have their own system, which is not really nice, but we can imagine that there's something like that we end up in. And as we already mentioned, and as Paul mentioned as well, that the single VAT registration sounds great, but how do you deal with claiming back VAT, input VAT? If that's not possible via OSS, the VAT refund procedures need to be really improved. So that's going to be very interesting to see how those type of hurdles will have to be taken.
Yeah, we already noticed in practice by ourselves running OSS and IOSS for customer base that it's a nice way of reporting and pay. But if you need to apply some corrections on previous returns that were submitted, then you're ending up with a lot of hassle with local tax authorities abroad. So not any simplification is on the table there.
Yeah.
On the contrary. So as such, the concept is okay. In practice, it needs to be improved very rapidly, and it needs to be put in place in such a way that businesses can indeed have some savings on their administrative costs, instead of ending up with numerous other issues there.
Yeah.
Okay.
Well, the good news, if there is any, it's still proposals, which means that they are still subject to change. If you listen to the European Commission, they will of course say that this was politically the best, or the best they could get, so to say, and they have already pre-cooked everything with all the member states. So the EU Commission is quite confident that these proposals will actually remain as they are. Maybe there will be some changes in the timing. Maybe there will some details that will change. Maybe 1 or 2 member states will have some exceptions, but they say we believe that everything will be in place. To be honest, I think that is also what we expect at this moment. But yeah, it means that first member states will have to approve the proposals. That's the first step. Then the next step is that member states will actually have to implement the changes into their national legislation. And not just implement the changes in the legislation, but they will also have to make sure that their systems are updated, that they are actually able to process all the transactions and all the invoices, etc. So that's going to be a very challenging time as well. The next step that is closest by is that if you have any opinions or any ideas or any comments on the proposal, you can actually submit those to the European Commission. You can do that even as a private individual. You don't even have to live or be established in the EU. You can just send an email via the link on the website and say, well, I don't agree or whatever. And to be honest, I looked at it very quickly. Most of the comments so far came from Germany, and some of the people actually said, I don't like paying taxes. That was their comment. Very helpful. But no, we are also thinking of really providing some more material and better argumented feedback to the European Commission. But everybody can do that. So also, if you have any ideas or any comments, just you can also let us know. And
share it with us as well. We will bring it further to the consultation input.
Exactly. Yeah, for what it's worth. But it's we will do our best to at least bring our opinion forward.
Again.
Yeah. And I think that's also what we can do today for this webinar. If you remember one thing, then remember that it's a huge change in VAT in Europe. And even if you don't really think about it yet, make sure that you read up on it, because there will be changes that will affect you as well. Especially if you are selling or buying goods in Europe. Yeah, think about how are you going to deal with the e-invoicing. Is your software, is your ERP system able to do that?
Let's all become a platform.
Yeah, that's the next step. That's the takeaway from the next webinar. No, but we will actually help you, of course, with any questions that you may have on that. But that's I think the easiest takeaway for today. Start thinking about it and start checking your own systems and your own software, your own ERP system. Are you able to actually submit and receive e-invoices? And then the next step will be, but that we can work on that later, to say, okay, well, how can I actually report everything within 2 days? Electronically to a tax authority in a system that is not in place yet, that doesn't exist yet, and nobody knows what it will look like. That's going to be interesting.
So let's get started with the basic then. And the basis is check your tax codes and check your systems on processing e-invoices. That's something you already can start with.
Exactly, yeah. So I think for this session, that's it. We will, of course, have next sessions where we will elaborate more on electronic invoicing, real-time reporting, platforms, one-stop shop, single registration, etc. But for now, I would like to ask Lonneke, do we have any questions for today's session?
No questions at the moment. Maybe somebody wants to add something. I don't know. Anybody? I don't see any hands, so I think you have been pretty clear in
Perfect.
your
Perfect.
story. Okay, if you do have any more questions, you can always contact us. Don't hesitate. We're always happy to help you. We recorded this webinar, so we'll send that to you by email. Also, the PowerPoint presentation that we made, we also will send that to you. We have planned the next webinar on March 8th at the same time. I hope you can join us then. That would be nice. Thank you for listening, and thank you for your attention. And I hope you will join us next time.
I saw one question coming in,
you
Lonica,
did.
I think. I can't see it, but maybe you can.
No, it's not a question, but people are thanking us. Thanks
Okay,
a lot.
well, thank you all then very much for attending, and hopefully we'll see you again next time. And stay in touch, either directly email us or send us a message via LinkedIn. Thank you very much.
Have a lovely day, though. Bye-bye.